depends which term you want to use. For example, here we are looking at an asset account. What you need to understand, your asset account increases on the debit side and they decrease on the credit side. So whenever you see an asset account credited, it means that that particular asset has decreased, or it tells you that assets are decreasing. Again, if you see your bank or asset account debited, it means that your assets are increasing. Just to refresh your memory here, bank account, we said it's money in your bank account. So what will happen is that if we are having an inflow of cash, if it's money received, your bank account will be debited because it's an increase with regards to your resources, it's increase with regard to your economic benefit, it's increase with regard to your bank account. Your bank balance is increasing. However, if you see your bank account on the credit side, it means that money in your bank account is being reduced. It might be because of your withdrawals, it might be because of your interest, or whatever the case may be, debit notes, or whatever accounts that might result in your assets in this regard with your bank decreasing. Okay, let us look now at your debtors control. With your debtors control, we are referring to customers that you sold goods on credit. So you sold goods on credit to these customers, meaning that you expect that at a particular period of time, or a certain period of time, these particular debtors will pay you this amount of money. If these particular debtors are paying you this amount of money, it means that this debtors control account will be credited because the number of customers that you once sold goods on credit are now being reduced. But if we are selling goods on credit, it means that your debtors control or customers that are owing us are increasing. That is why we are going to use the debit side. But if we decide to record debtors control on the credit side, it means that customers that we sold goods on credit to are now being reduced. Now, why would our debtors control decrease? I will mention two possible reasons. It might be because our debtors are paying us. But again, it might be because of goods that are being returned. Maybe because it was wrong order delivered, or with these products there are defects. Again, it might be the issue of bad debts that would have a negative effect towards your debtors control. Let us look at your vehicles account. We are still talking about assets. With vehicle account, we are referring to a car, a delivery van. With this delivery van, whenever we buy a delivery van in our company, it means that our vehicles or our assets are increasing. If we were having one vehicle and we are buying another vehicle, we are now having two vehicles. So that is why assets, or rather that is why vehicles is recorded on the debit side of your account. Remember, your debit side with your debit side account, debit side of your assets. But when it comes to a period where we decide to sell this particular asset or to derecognize this particular asset using the asset disposal, the same vehicle will be recorded on the credit side at its cost or historical cost. Whenever we record the vehicle under assets, we record them at cost, or the amount that we have paid when we are buying this asset and other attributable cost or other contributing cost that made us to have this particular vehicle on our premises. Then let's look at petty cash. Petty cash, we are referring to an amount of money that we have in our business, hard cash. We keep this amount of money to minimize regular withdrawals that are unjustified. But we are doing this to make sure that we have cash readily available for any form of expenditure, for any form of expenses, but it must be minor expenses. 100 rand, 150 rand, 200 rand, all those amounts of money that we know that it will be of no reason for us to keep on withdrawing money, but we use this amount of money to make sure that for those emergencies, minor emergencies, expenses of minor value are being catered for. So whenever we are withdrawing money so that we have petty cash in our premises or in our business, petty cash amount will be debited, but bank will be credited because the amount of money is being reduced. The amount of money is being reduced in our bank account, but with regard to petty cash, this amount of money will increase. So in this regard, both accounts are assets. You debit petty cash and you credit bank. Now, if petty cash is being credited, remember your left hand side symbolizes your debit side and your right hand side symbolizes your credit side. So here, with regards to petty cash, why are we referring to petty cash on the credit side of your assets? It's simply because we are now utilizing this amount of money. Maybe we are paying for stamps, postage stamps. Maybe we bought refreshment for 200 rand. Now your petty cash will be credited. If your petty cash is being credited, it means that the amount that we had on our premises, making sure that we are paying for all these minor expenses, is being reduced. That is why you will find petty cash on your credit side. Now let us look at inventory, or previously known as trading stock. So these terms are used interchangeably. For example, it's inventory or trading stock, referring to one and the same thing. Inventory or trading stock. Let me first explain this term trading stock. It is stock. We are referring to goods, we are referring to a product that we buy with an intention to sell, that we buy with the intent, with trading purpose, for trading purposes. That's why we call them a trading stock. Now, why would make our trading stock debited, and why we will find our trading stock credited? So now let us look at our trading stock debited. Now, whenever we are buying goods for trading purposes, our trading stock increases, or the value or an amount or a quantity of our trading stock is increasing. So you'll debit trading stock and you'll credit bank if those goods were bought on cash. That is why you will find trading stock being debited. But also, you can also find your trading stock account credited. How? Let's say you are returning goods due to being unsatisfied. You can also find what? Trading stock on the credit side. Or you are selling those goods. You will also find trading stock on your credit side. You will debit cost of sales and you will credit what? Trading stock. An asset is being reduced by an expense in this case. So allow me to continue to the next slide. We are now talking about liabilities. With liabilities, we are referring to external companies or individuals that we had borrowed money from or we bought goods on credit. But we are at the position where we find ourselves owing these people. That is why we refer to liabilities. You will remember with regard to my previous lessons, I also differentiated or separated between the two, which is your non-current liability and your current liability. In this case, if we are referring to a loan, we are referring to a non-current liability only if that amount of loan will take us a period of a financial year or more, 12 months or more, for us to be able to pay for that loan or to settle the balance owing. But if it's less than a financial period or less than 12 months, we regard that amount of money as a current liability. Non-current, we are owing them for a period of a financial year or more. Current liability, we are owing them for a period of less than 12 months. Because with that regard, we are referring to a current liability, an amount of money that could be settled within a period of time. So, why would you find, first of all, with liabilities increase on the credit side and they decrease on the debit side. So, if you are referring to, or rather, if you have loaned credited, it means that we borrowed an amount of money or we continued to borrow more. That is why our liabilities are increasing. Then, if our loan or our liabilities are increasing, they increase on the credit side. We have borrowed an amount of money. It means that bank will be debited because the amount borrowed will be in our bank account. So you will debit bank and credit loan. That is what we mean by a double entry system or concept of duality. Now, let us look at creditors control. If we are referring to creditors control, we are referring to those suppliers that we bought goods from on credit or on account. We didn't pay, but we entered into an agreement, a short-term period of an agreement of short-term period where we said we are going to pay you guys within the period of 12 months. That is what we mean by a current liability. So, if we bought goods on credit, we are going to have an increase with regard to an asset. We'll debit an asset. Remember, assets increase on the debit side and they decrease on the credit side. So, what will be credited, or in a contra account for trading stock, it will be creditors control because they increase on the credit side. Again, if I'm referring to a contra account, I'm referring to an opposite account. If a particular account is debited, a particular account will be credited. That is what I mean with regards to a contra account. Now, why would you find creditors control on your debit side? It's simply because we have paid these debtors, we have paid these creditors. We were owing them, but now we have made some means to pay them. That is why now creditors control is being debited, and in this case, bank will be debited because we use an amount of money in our bank account to pay for these creditors. So it is a decrease in our bank account, and assets decrease on the credit side, but creditors control decrease on the debit side. So with regards to double entry system, even if two accounts are affected, even if both of these accounts are increasing, there should be a debit, there should be a credit. Even if both of these accounts are decreasing, there should be a debit, there should be a credit. So let us continue to the next slide. Equity